Hello there. Welcome to The Close. Let's get to the big stories we're bringing you from our newsroom. Home sales have continued to slide. According to a report from the Canadian Real Estate Association, it points to an almost 11% drop in November sales year over year. That decrease comes alongside an almost 2% drop in the average national home price for the year. Looking forward to 2026, analysts say the market could pose something of a recovery as interest rates hold steady, enticing new buyers. Housing starts across the country moved higher in November, beating market expectations. Canada Mortgage and Housing Corporation says that on a seasonally adjusted basis, starts rose 9.4% versus the previous month. The agency warns, however, that there are still signs of slowing momentum in residential construction. CMHC says confidence among Canadian home builders is at a record low due to growing concern over sales and elevated trade policy uncertainty. Canada's overall inflation rate held in November at 2.2% year over year, according to Statistics Canada. However, grocery prices rose by nearly 5%. Hit their highest level since late 2023. Moving into 2026, analysts expect volatility in the inflation numbers and predict that there will be little in the way of interest rate cuts. Shares in Equinox Gold under pressure. The Canadian miner said it's selling its Brazil operations to China's CMOC Group. The deal is valued at a little over $1 billion US. Equinox says the move will allow it to simplify its portfolio and focus on growth opportunities in Canada and the US. Some analysts see the deal as a positive, but note that the sales price is lower than expected. And here is a look at the TSX. It is down slightly. The US and Canadian markets closed at record highs on Thursday of last week. And there's a look at US stocks. They too are down. We have seen some weakness in the bigger tech or AI stocks, some of them today. Let's get more on those inflation numbers. The rate holding steady in November, although there are signs that the so-called core measures are cooling. Our guest thinks, in fact, the Bank of Canada is unlikely to raise interest rates before 2027. We're joined by Benjamin Tal, Deputy Chief Economist at CIBC. Benjamin, thank you so much for joining us. Feels like ages since we spoke. So these latest inflation numbers, will they please the Bank of Canada, broadly speaking?
I think yes. I think that the Bank of Canada is telling you that the inflation is slowing, but it's not low enough to cut again. And listen, clearly we don't want to focus on the all items CPI numbers because it will confuse everybody. Because remember, a year ago we got all those GST, HST break. Back then it was temporary basis, so on a year-over-year basis, the numbers will be poisoned when it comes to all items CPI. Therefore, the focus is on core CPI. And those numbers are okay. If you look at the last 3 months on an annual basis, they're rising by about 2.5%. So higher than the market would like to see, but clearly not the inflationary environment. So the Bank of Canada will be very happy with the decision not to move anytime soon.
There was a jump in grocery prices, and that's very visible to the consumer.
Absolutely, absolutely. This is a major issue that has nothing to do with monetary policy or even how strong the economy is. It's global issues, as we all know. Global warming is part of it. What's happening in Alberta in terms of the meat supply is one of it. one of the things. So a lot of things happening that the Bank of Canada cannot really control. So they're telling you, listen, inflation is not at 2%. And I believe, quite frankly, that the bank should cut, but they will not cut. I think that the economy is relatively weak. If you look at the labor market, I think that the recent numbers are exaggerating how strong the labor market is. Youth unemployment is still elevated. And I don't see the consumer really moving anytime soon. Investment is basically negative given the fog of uncertainty. So I think they should cut, but they will not cut. So this is really the most important thing. They will not cut. But I'm surprised by the market expecting the Bank of Canada to start raising interest rates in 2026. I simply don't see it happening. The economy is inconsistent with this kind of call.
That's interesting. Yeah, there seems to be something of a consensus emerging that we will get an increase in 2026. You think that would be premature, though, for the bank?
Absolutely. I think that if you look at overall inflation, there is no reason to believe that it will be sustainable. The Bank of Canada has been talking about, inflation due to cost push inflation. But if you look at the numbers, it's really not happening. One thing that people are talking about, and that's extremely important to understand, is the recent revisions to numbers. If you remember, Stats Canada increased their call of the last 3 years by 1.7%. And people say, you know what, maybe the economic slack is no longer there because now we are very close to potential. That's not correct. Yes, it's true that GDP went up better than expected, about 1.7% in terms of the revision, but also potential GDP went up by 1.7%. So we are still below potential. We are actually in negative output gap, and that's why it's disinflationary, and that's why inflation is not a major issue going forward.
The monetary policy, I know this is a cliche, but central bankers are at pains to remind us we can't do anything really about tariffs.
Absolutely true. I think that the people who can do something about tariff is Trump's base, and I think that if you look at what is the most reasonable narrative when it comes to Trump, I think that the narrative is that time is not on his side. In a year from now, he's going to face the voters in the midterm elections. What do you have to show for? The unemployment rate is rising. Inflation is basically rising. You have to mortgage your house to buy a banana or something. At one point, people will say, Mr. Trump, we did not vote for that. The labor market, those jobs are not coming back. And guess who is paying for all those tariffs? The consumer. This is a de facto tax. At one point, his base will say, Mr. Trump, we did not vote for that. And that's why I believe we will have to compromise. Tariffs are here to stay, but they will not be as high as they are now.
What about the outlook for the big trade deal renegotiation next year? I mean, we'll get lots of headlines and President Trump blowing off steam, etc. But will it be a big deal for the economy, or do you think there'll be major changes in that trade accord?
I think it will be a big deal over the next 6 months, because that's where we are going to negotiate it, and there will be a lot of confusing signals coming from Trump. This volatility will be there, so that will be negative for sentiment. But I think that in the second half of the year we will sign something, and this something will be by sector. So the way I see USMCA moving forward is that it will be very narrow but very deep. Namely, if you are dairy, I'm a bit worried. If you're lumber, I worry, because I think that they will go after those sectors. If I'm energy, I'm not so worried. And the auto sector, I think that it will be smaller than it was in the past or currently, but it will not be devastated. So it will be narrow, but deep. It will be by sector, and I think that's the way to look at it. Is it manageable? Absolutely, it's manageable, especially with some government support to those industries.
Sorry, Benny, give us that again. Which of the sectors do you think could be hurt with this renegotiation?
Yeah, I think that dairy will be one of them. I think that they were not going to compromise much, given the supply management issue. I think that lumber will be another factor, another sensitive sector that will feel the pain.
Thank you very much. Really appreciate it, Benjamin. Have a good one. Benjamin
My pleasure. Thank you.
Deputy Chief Economist at CIBC. Up next, the markets have been in the red today. Key stocks in the AI trade continue to face pressure. That's ahead. Our guest is optimistic about commodities. He points to ongoing Federal Reserve interest rate cuts and a weakening US dollar. Let's get more from Martin Peltier, Senior Portfolio Manager at Trivest Wealth Counsel with Wellington Altus Private Counsel. Martin, thanks very much indeed for joining us.
Hey, betcha.
Gold again near record highs today. I know we could argue as to whether it's a commodity or not. It is a form of money, many would say. But broadly, commodities, you see a bright outlook ahead?
Yeah, for anything that's sensitive to a falling US dollar, last week's FOMC meeting was very important, especially on the presser with Chairman Powell taking a very dovish tone in regards to his outlook. He mentioned specifically that inflation seems to be, close to being tackled, but more so on the employment side. So they have the dual mandate, as you know. The employment side, he mentioned about the job numbers being revised from a plus 40,000 per month to minus 20,000 per month. So then unemployment numbers getting worse. So they're being proactive, probably going to see some further rate cuts. Fed is buying on the front end of the curve regards to funding the government's fiscal deficit by buying T-bills directly, $40 billion a month. So there's a lot of liquidity, a lot of stimulus coming into the market at a time where Main Street is starting to show signs of weakness.
Okay, so a decent environment for risk assets. Does that apply to high-flying tech stocks?
Well, it's interesting you say that, because if you look at Bitcoin, Bitcoin's been selling off and gold's been going the other direction. So you have to make sure you pick your winners in this dovish type of Federal Reserve. And that's tricky, obviously. So risk assets will do well. However, depending on what area of risk that you're looking at. On the large cap side, the S&P earnings are quite strong, actually quite surprising compared to the tariffs. S&P earnings were up 22% year over year in the third quarter. That's the strongest quarter since 2021. Profit margins are up a record to 13.6%. When you look at small caps or smaller businesses and small caps, 30% are expecting to raise prices to tariffs. 60% reported rising costs due to tariffs. And so you have a certain segment in the market that's being impacted by tariffs. Certain that isn't, certain segments that are being impacted by a dovish Fed and liquidity, and certain areas that are not. And so you have to be extra careful as to where you're going to play this market.
And I have to ask about oil, Martin. Are you optimistic or do you think the oil companies will see any recovery in the crude price?
I'm bearish. I'm sorry to say. We made the call earlier this year to reduce our energy positions. And what's really interesting is that the oil price, we made the correct call with the oil price. Oil price has been selling off, but oil stocks have been actually holding in quite well. I am a little more concerned about Canadian oil and WCS. That a seized tanker in Venezuela is going to make its way into U.S. refineries, I believe, and another Venezuelan crude, I think Chevron mentioned. And that's going to put pressure on WCS and Canadian prices. Now, hopefully a falling, and then at the same time, you have a falling U.S. dollar, and that's also not good because, as you know, these producers get paid in U.S. dollars.
China, you think, could be a source of weakness for the global economy next year?
Yeah, and that's really interesting. Tying it back to what you're asking about oil, they've been buying more oil, fortunately, and filling their reserves. And that's been very supportive given the supply-demand imbalance, the excess supply coming on from OPEC. That may not last forever. We'll see. And you're looking at fixed income investment that I just noticed recently here. In the third consecutive month in November, it fell 2.6% year on year. So that was a sharp decline and worse than what many analysts were expecting. And many are calling for the government to introduce more stimulus. At the same time, you have what's happening in Japan, where they're trying to defend their yen, and that's also a negative in regards to the yen carry trade. So there's I call it the market of contrasts. You have some really good things happening with liquidity coming into the market via the Federal Reserve. At the same time, you have economic weakness in China, tightening in Japan, and maybe in Europe as well.
We've less than Martin, I think we'll have to leave it there, actually. Sorry, I wanted to get into that yen carry trade, but we just don't have time. Thanks very much. It's always great hearing from you.
Awesome. Have yourself a Merry Christmas.
You too, Martin. Thanks very much. Martin Pelletier, Senior Portfolio Manager at Trivest Wealth Counsel at Wellington Altus Private Counsel. Up next, Canopy Growth has agreed to acquire an outfit called MTL Cannabis. We heard from the Canopy CEO. That's ahead. Welcome back. Canopy Growth, the cannabis seller, has agreed to acquire an outfit called MTL Cannabis. It says it expects this deal will lift it to the leading position in Canada's medical cannabis market. We heard from Luc Mongeau, CEO of Canopy Growth.
I've been at the head of Canopy for now close to a year. And with the team, we've been really focusing on building the fundamentals of what can become a global leader in cannabis, both medical and recreational. So the addition of MTL really accelerates our journey to being positive adjusted EBITDA, generating cash flow, and providing consumers and medical patients in Canada across Europe with the best flower available out there.
Now, with it, you mentioned about your negative EBITDA cash flow and cash flow. What will this change for those? You were still single-digit millions, I believe, for adjusted EBITDA loss last time?
Yes. Absolutely. This transaction is highly accretive. MTL is part of a select group of Canadian LPs that have achieved positive EBITDA, that are generating positive cash flow. So when you combine that with all the efforts that we've put into place over the last year to really control our costs, solidify, beef up our balance sheet, all the efforts that have been put into place to allow that we're now growing our Canadian rec business at around 20% year over year. We're growing our Canadian medical business at double digit. All these things will really accelerate our journey to positive EBITDA and positive cash flow generation.
And how do you plan to underwrite? It's a $179 million valuation, and MTL had $84 million in trailing 12 months and 51% gross margin. How are you going to underwrite that?
Well, the focus is really, we focus on the strategic side of things. And so their margins, they're able to generate margins are significantly better than ours. Ours are improving. Canopy's are improving right now. So the combination of access to very lean operation, to superior growing capabilities will allow us to improve our margins, and we'll feel these impact all the way down to the bottom line.
And did you consider trying to do this organically, or is this the better? Do you feel this was the better move?
This is really the better move. We've been, not that we're not going at it organically, we've been really unleashing the power of Canopy, as I said, for the last 12 months. And that's why we've been able to return Canopy to growth, as I said earlier, recreational growing at 20%, medical business growing at around 17% right now. This will just accelerate how we position Canopy as a serious global player.
And with the global market, what kind of obviously the big thing would have been the news out of the U.S., the possibility of changing the category for cannabis. Are you prepared for that? Are you ready for that if that does happen?
Yeah, absolutely. And, to really take advantage of a potential strong market, Canopy needs to be very strong in Canada and in Europe in a way that we can really build a capability to invest in the U.S. market. So in the U.S. right now, we've got our investment in QSA. We're working very closely with the team there and providing them the help, the guidance, the support that they need. And we've got our investment in TerraSense. So we're extremely well position to take advantage of changes in the U.S. But as I said, we need to be extremely strong in Canada, in Europe, and Australia to build a capability to invest in the U.S. once the market opens up.
And how's the situation in Europe and in Australia?
Yes. Well, these markets continue to do extremely well. They're growing, especially in Germany, growing extremely quickly. This acquisition of MTL will really give us access to superior quality flour that we can take to the European market to really unleash the power of Canopy abroad.
And do you intend to keep MTL as more of a boutique? How do you plan to merge these two? I believe you said you hope to save $10 million over the next 18 months. How do you plan to merge them but keep it unique?
Yeah, we're building one company here. So this is going to be a complete merger, two companies coming together. What we're really going to focus on and really make sure we harness is the superior capabilities of MTL of growing high quality flour, higher levels of THC at very efficient costs. And that's why their CEO, Mike Perron, very talented individual, will lead our operations, will be our chief operating officer globally, really leading our operations. That's why for us it was extremely important that the two founders of MTL be involved in the new to be formed organization. They will be quite involved in our cultivation and manufacturing operations activities to really make sure we keep the best of MTL and actually marry the best of both organizations.
How do you plan to scale up MTL? You said talked about the quality. Sometimes it's hard, though, to bring quality up on a larger scale. How are you going to balance those two?
Yeah, listen, it's not my first rodeo. I've been through multiple integration over the years. We're putting in place very rigorous PMO approach to make sure we phase out the integration. This is like, we've been talking to Rich and Mitch for a long period of time. They have visited our facilities. They know what they're signing up to. Growing great cannabis is a bit of a science and art. So we're going to take this slowly, gradually, to make sure that we don't trip, but we have a high level of confidence that we can elevate the quality of the flour across the entire network.
And just one last question. Any concerns about regulatory on this approval or the MTL shareholders?
We've checked everything that we can. We foresee smooth sailing ahead of us.
Luc Mongeau, CEO of Canopy Growth. Let's take a quick last look at the markets before we get those closing bells. And there is the TSX down slightly from Thursday's record high close, but certainly it's been a decent year for investors. And let's have a look at the U.S. markets. They have come under a little bit of pressure again today amid concerns that some of these AI stocks are overextended. We did see some selling in Broadcom again today after a pretty big sell-off last week. We're going to have to take a break. We'll be right back. There you have it, the closing bells on Bay Street and Wall Street. At the NASDAQ, it's Sionna Therapeutics doing the honors. In New York, it's Equitable shares ringing the bell. You are watching The Close on BNN Bloomberg. Let's check out the markets. As you can see, stocks under a little bit of pressure amid fresh selling in some of the tech names today. And as Larry Berman reminded us, we get a double dose of U.S. labor numbers tomorrow, 2 months worth, delayed because of the government shutdown. Investors may be holding off to some extent to see if there's any clues there as to direction for the economy and interest rates. One stock doing well today, Barrick Mining. That company has won back control of that huge mine in Mali in West Africa. The government handing it back after resolution of a dispute over taxes and royalties. And it will also return 3 tons of gold to the company. And so they're awaiting the actual procedure or the formal conclusion of legal proceedings. But Barrick is essentially back in control in Mali. Meanwhile, gold trading near record highs today. One stock under pressure over the past while has been Shopify. Let's see how it did today, because we saw some selling in Shopify. Investors were excited last week by the prospects of AI being used by Shopify's merchants to get people to click buy faster. The Logic, the Canadian business publication that is always readable, cites employees who it doesn't name as saying that morale has been damaged at Shopify by several rounds of redundancies. They've been small but regular layoffs, and apparently people are feeling insecure. Let's have a look at Celestica, because it's been an AI darling, but it has come off its highs. Celestica down as well, the big maker of AI computing gear. Broadcom, that was hammered last week, and we saw fresh selling in that name today. And yeah, you can see down 6%. And just slower growth in AI than investors wanted to see. And Oracle, that has become really a prominent example of a company that may have bitten off too much in all this AI euphoria, racking up a debt load north of $100 billion US, according to Bloomberg's calculations. Maybe we could have a quick look at Group Dynamite. I think it's, GRGD in Toronto. That stock has been climbing to record after record. Now, it's not quite at a record high today, still slightly down from Wednesday's close, but moving up sharply today. A lot of their growth is predicated on expansion in the United States, and the stock got an initiation with a buy rating at Goldman Sachs. That was last week. So Wall Street taking notice of Group Dynamite as well. Let's get more in the markets. We're joined by David Nelson, Chief Strategist at Bellpoint Asset Management. David, always great to talk to you. Thanks for joining us. What do you think? More selling in Oracle and Broadcom. Is it going to be a while before investors forgive stocks like that?
I think investors are abandoning some very popular large cap secular growth trades. Some of these trades are part of the Mag 7. I think part of it is because for the first time in years, they have some choices. Every company on the planet has an AI policy today, and a lot of companies are getting that productivity bump. So investors are kind of looking down the food chain for some other opportunities, and a lot of other sectors that have kind of lagged for the last couple of years are suddenly taking off.
That's interesting. We did see the Russell 2000 hitting record highs last week.
Yeah, it's all part of that. It's all part of that trade. You know, right now, operating margins inside the S&P 500 and other indices as well are on the rise, in part because of AI. We're all using it. And, you know, the edge today isn't knowing whether or not your company has the next fastest chip. That's probably consensus at this point. It's really understanding what other companies can adopt this technology and take margins to new heights. And that's probably where the alpha trade is right now.
So you say that the builders of AI, NVIDIA, Microsoft, and the hyperscalers, they have these high multiples, 30 to 90. And you say for a stock trading at 50 times to double, it requires perfection. And so you think that might be putting some investors off.
Yeah, and in the case of Broadcom, it was a less than perfect quarter. They didn't really raise guidance everybody had expected them to do. A very key contract that they had with OpenAI seems to be pushed off an extra year. So that has to get repriced, and that's what it's undergoing right now. On the other side of the table, you have a company like from a couple of weeks ago, Abercrombie & Finch, who's started to use AI with a very undemanding multiple. AI actually added to their top and bottom line. You don't get a 5-10% move, you get a 40 to 50% move.
A&F, that's interesting. So how are they using it? I guess just more accurate stocking would be one thing.
Yeah, that's part of it. Inventory management, customer experience. Every company's using it. We're using it here, of course, at BellPoint. I'm sure they're using it right at the studio right now where you are. It's a fabulous set of tools. We're all learning how to use these to make ourselves more efficient and get more productivity each and every day. And each 1% move in productivity for the market does wonders for stock prices and multiples. It just may not be the usual suspects.
Yeah, we use it, but we trust but verify. We find you click through on the links that it gives you. Yeah, one thing I can't believe is how AI won't admit that it doesn't know something. Yeah, I rarely see it say, no, I just can't find that information for you. Anyway, one stock you're watching, Salesforce. Now, apparently they have been notorious in the past for tooting their trumpet on earnings calls, but you say we got some candor from them?
Yeah, it got hit today, probably off the ServiceNow announcement. But what we're finding with AI, a lot of companies that are trying to deploy these AI agents, they're getting frustrated. A lot of large enterprises, and they're going back to some of these legacy software companies for some help. Even some of the consulting firms are getting a bid.
Mm-hmm. Okay. Now, you have a headline in one of your pieces here. The AI revolution is just getting its hands dirty. What do you mean by that?
Well, just look at the industrial complex. You know, it's not just about the cloud. I mean, when you build a data center, you're going to get your hands dirty. You're talking about traditional labor jobs. There's a real shortage of electricians right now. Some electricians can make as much as $500,000-$600,000 a year. That's kind of unheard of in past years. We're building out the electric grid. It's almost the old industrial economy is being revitalized by AI. So it's almost we're going from the cloud back to the ground. Yeah,
although, I mean, we did see a big run-up in stocks like Eaton or, GE Vernova. They make the gas turbine equipment. So it is out there in the market, isn't it, that these electrical stocks could see huge growth?
There's massive growth there, and the multiples reflect it. GE Vernova is a name I don't own right now. God, I wish I did. But it's a pretty expensive name. Probably trades at around 90 times this year's, maybe 60 times next year's earnings.
Broadly speaking, how are you viewing the interest sensitives right now? And what is an interest sensitive? I suppose I'm thinking about banking stocks. Are they inflated? If the Fed goes on cutting, that helps their margins.
Well, the banks are a real harbinger of the kind of barometer of the economy, so to speak. And right now, GDP growth is climbing. We're seeing it in almost all the data. I've seen numbers go from 1.5% to 2.5%. There's some out on the edge as high as 3% for next year. That's probably good news for banks. I think it's pretty clear the short end of the curve is going to go down. We're going to have a new Fed governor in just a few months here. What I take pause with is the idea that 10-year rates might come down. I think that's going to be very, very difficult. I think 10-year rates will remain elevated.
You have a couple of stock ideas for us. They're fresh ideas to me. News to me, as the guy used to say, Kevin Nealon on Saturday Night Live. RPRX Royalty Pharma. What has drawn your attention there?
You know, we saw last month healthcare stocks outperform tech by about 1,600 basis points, 16% in a handful of weeks. Now, this is a fundamentally very, very different drug company because they don't discover drugs. They don't manufacture drugs because drug discovery is often a binary event and can be pretty risky. They invest in the revenue streams of very successful drugs and late-stage drugs about to go live. So in other words, they're betting on the winners. They've had a lot of success with this, and yet it trades at 9 times earnings with significant free cash flow. The earnings are kind of lumpy. I guess that's why it gets the low multiple. But at 9 times, I'm willing to sit with it.
And then finally, Vertex Pharma. The stock took a hit there during the summer, but what it's in cystic fibrosis?
It is, and actually, my only relation to Vertex is that royalty gets significant revenue from Vertex Pharma's cystic fibrosis. Fabulous franchise. Some risk for Vertex because they're desperately trying to get another revenue stream to accentuate this their cystic fibrosis franchise because it's such a significant portion of their revenue.
And then you have one called Huntington to close us out. Huntington Ingalls, what are they all about?
Yeah, it's the defense trade. And I love defense stocks because they're kind of an insurance policy for your portfolio because, God forbid, there's a geopolitical or military event. These are the only stocks on your screen that are going to be up that day. What makes Huntington different is they're one of only 2 companies on the planet that can build nuclear-powered submarines for the U.S. Navy. You cannot replicate the barrier of entry they have. They have a backlog of $56 billion, and they're about to go through a massive free cash flow bump because a lot of legacy contracts are going offline. The new contracts give them a lot more bang for their buck.
David, we always cover loads of ground with you. Thank you very much. David Nelson.
Thank you.
Thank you. Chief Strategist at Bellpoint Asset Management. Up next, for the first time in years, David Rosenberg is bullish on the Canadian dollar. That's ahead. Canadian dollar has been on the rise lately. We sat down with David Rosenberg of Rosenberg Research and Associates. He says he is bullish on the loonie for a number of reasons. Let's hear why.
Becoming in the past several months increasingly less bearish. You know, we were negative on the Canadian dollar and for the most part quite right for the last couple of years. But as John Maynard Keynes said, you know, when the facts begin to change, you should start to change your view. And so there's been some changes at the margin in the past several months that we've taken notice of. You know, one of them being that the Bank of Canada seems very comfortable staying with the policy rate where it is at 2.25%. The Fed just cut. They're probably going to cut some more. I think at least one more rate cut. I think in the U.S., the dot plots, I don't really pay much attention to them. I think the Fed's got at least 2 or 3 more cuts and the bank's on hold. So the interest rate differentials are going to increasingly be a tailwind as opposed to what was a headwind for the Canadian dollar through much of the Bank of Canada's easing cycle, which of course took place before the Fed started getting into the game. So that's one part of it. You know, the other part of it is that our terms of trade, you know, our export prices relative to import prices, which has a strong correlation with the loonie, has started to really improve. We got to keep in mind that unlike the United States, Canada, you know, much like New Zealand and Australia, we are a hard asset currency, and the commodity sector is starting to look a lot better, especially in the base metals, and oil prices look to be putting in a floor. So that's added good news. There's certainly less negative news for the Canadian dollar. You know, and then it'll come down to the fact that, you know, we dodged a bullet because, you know, you go back to the spring, we thought that Trump was going to unleash a major trade war against Canada with all those reciprocal tariffs, that we're going to enter into a global trade war, which would have additional negative consequences for Canadian economy because we're a small, open economy. So we dodged those bullets. And the reality when push comes to shove, and this is what's different with Carney vis-a-vis Trudeau, is that whether you like it or not, I certainly don't mind it, is that Donald Trump has chosen to like Mark Carney. You know what that means for renegotiating the trade agreement next year remains to be seen. But the reality is this, that for all the angst and anxiety over the tariff file, when you look on a relative basis to the rest of the world, we came out relatively unscathed. You know, most of the products that Trump slapped tariffs on, most of them are covered by the trade agreement and weren't affected by the tariff war. So, of course, we're still all upset about the 51st state and, you know, a lot of the stuff that Trump has said in the past. But the reality is that when you look around the world, we came out actually a relative winner from the Trump tariff file. So all these things put together, and of course, we look at valuation metrics. You know, we look at valuation in the stock market, then in the U.S., it's nosebleed levels. But for the Canadian dollar, the valuation metrics that we looked at in the past couple of months were telling us that the Canadian dollar was extremely undervalued. The question is, what was going to be the spark? And I'll tell you that it's not just the Fed still cutting rates and the Bank of Canada on hold, but, you know, I gave the Carney budget a B minus, which sounds like I'm a tough grader. But I haven't given a mark like that for a Canadian federal budget since the Harper years.
Wow.
So there was lots in there because it really was at its root. I mean, look, every budget's going to have its warts, its pimples, and its scars. But I did like the supply side productivity nature to this particular budget. And the fact that now we're starting to see Mark Carney, I'm sure the environmentalists are all up in arms about it, but I'm here forecasting the Canadian dollar. The fact that Carney at the margin has shifted away from his, green thumb, pro-environment policies towards something that's more pro-growth, especially on the resource side. To me, if you're a Canadian dollar watcher, that's another big positive. The fact that we have a more responsible immigration policy now means that, and as you said about the economy, we're finally starting to see for the first time in many, many years, positive growth in real per capita terms in Canada. So absolute terms, growth might not be that great, but per capita, it's been negative because of our unprecedented immigration policy. So that, again, at the margin, all this stuff helps. 77-cent dollars, like, I'm not saying we're going back to par. Wouldn't it be nice if we ever did? But I think that enough of the negatives, enough of the headwinds have been taken out to at least shift from what was the long-term bearish stance on the loonie to something that's a little more moderately positive.
And what might be some of the challenges with a 77-cent loonie? Those are, you mentioned the positives, or what will guide it and what will bring it up to there. What might be some of the challenges as the dollar rises, though?
I don't think that there's, so long as the Canadian dollar doesn't go above its fundamental valuation metrics, there's nothing wrong with it. It's not like, the Canadian dollar is going up and this is going to be a major impediment to the manufacturing sector. It's basically just the Canadian dollar is a price, like everything else is a price. It's a price, and the price is revealing some of the improving fundamentals in the Canadian economy. So it's not like you're going to say, the Canadian dollar is appreciating, we should all be worried about it. We should actually embrace it, because when you really think about what is a currency, what's an exchange rate, it's a relative pair trade. So here we're taking a look at Canada versus the US. We could look at Canada versus other countries. But when your currency is appreciating relative to your neighbor, it means that relative to your neighbor, things are going right on a relative basis. So I think it's something that we should be embracing because it's a price that reflecting at least something that isn't as negative as it was 6, 12, 24, 36 months ago.
And what does that do for servicing debt?
What does it do for servicing debt?
The stronger.
Okay, well, that's a real circuitous argument that it doesn't do anything for servicing the debt, except insofar as if I had to basically, draw an argument, really second round impact. It's basically a stronger dollar will help contain import costs. It is ipso facto something that would be inherently disinflationary. So it would mean the potential that interest rates can come down at the margin. But that's drawing a really indirect link. But if you're talking about how to service the debts, because a stronger currency leads to lower inflation as a standalone event, it should be good news from that perspective, at least at the margin.
David Rosenberg, founder and president of Rosenberg Research and Associates, joined us earlier. Coming up, a company called Lift Power, which wants to hard rock mine lithium, is expanding its presence in Quebec. We'll hear from the CEO after this. Lift Power is working on projects in Quebec and Canada's north aimed at hard rock lithium mining. That stock is up 70% in the past year. And now the company is acquiring more projects in Quebec, and it plans to sell new shares or new equity for $40 million. We're joined by Francis McDonald, CEO of Lift Power. Francis, thanks for joining us.
Thanks for having me.
So remind us what you're all about. We know that lithium, Australia has a huge hard rock mining industry for lithium. Canada, not so much. It's really pretty nascent. What do you plan to do here?
Well, just to talk to that point for a minute, to Australia and Canada. So Australia and Canada have very similar geology. And Australia was really leading the last run up in lithium mining. So the last cycle of EV sales and demand when in the 2010s. But lithium is also present in Canada, and we've got incredible resources out there. It's just that finding them sometimes is a little bit more difficult than Australia. For Lyft, what we're planning on doing is we have our flagship asset in the Yellowknife, just outside Yellowknife in the Northwest Territories. But what we announced today is the acquisition of Winsome Resources, which is an Australian company that has a hard rock lithium project in Quebec. And also as part of that, we announced the acquisition of a property just to the south of Winsome Resources as well.
So at this stage, what project is closer to actual production, closest to actual production?
The Winsome Resources property, Adina, is closest to production. And one of the ideas that they had was refitting a diamond mine. So this is a diamond mine called Renard.
Oh.
It went into care and maintenance, and the processing for diamonds is actually very similar to the processing for lithium. And so if they went down that route, this would be potentially in production in 2029.
That's interesting. So have you got any kind of a budget, roughly? I know it's early days, as to how much it would cost to get into production?
This would be going off of Winsome's original technical study or scoping study, and it was about 350 million Canadian to do that. But the real unlock for Lyft right now is by putting these two properties together. So this is the Winsome property and the one to the south. And the deposit sits right on the claim boundary. So you can think of this as a line just drawn on the map. And sometimes those lines run right over the top of deposits. And so out of the 78 million tons that Winsome has in resources, there's only 35 million tons that can be within an open pit. But if you take that claim boundary away, we think that we can probably double the mineable resources. And so it's really a consolidation within a known area, and you're just taking a line off the map and unlocking a lot of value that way.
What is the economics of producing lithium like that? Do you need an offtake partner, for example?
Eventually, yes, but at this stage, it's a little bit further off from that, but there's lots of off-takers out there, and we're seeing trading houses start to come into the lithium space. So companies like Glencore, they're out there looking for spodumene concentrate. So this is the feedstock for battery chemicals.
So when you produce lithium from a hard rock mine like that, what do you get out? Is it very bulky? Does it need an awful lot of processing to get to the actual lithium?
Yeah, so I mean, these deposits, you can think of them like a granite, and it's very similar composition. It's got one specific crystal in that kind of granite-like rock that's called spodumene, and this is what has the lithium in it. So the processing is relatively simple. We're just concentrating that specific crystal spodumene, and that's the saleable product. And then that would go through a refining process to make lithium carbonate or lithium hydroxide that would be used in batteries.
And do you have any kind of government partners yet, or have you had the U.S. Department of War sniffing around or anything like that?
Lyft currently has a corporate strategic investor, that's Avenir Minerals. And this is the critical minerals spin-out that was announced by Agnico Eagle. And so they are at a 9.9% ownership in Lyft Power, and they intend to maintain that 9.9 ownership through this next equity financing that we're doing.
Sorry, just remind us, what is Avenir? So Agnico launched this Avenir unit, critical minerals unit. Oh, they just did that in October, yeah.
Yeah, that's right.
So what's next news flow-wise from you guys at Lyft Power?
So once the transaction closes with Winsome Resources, so we've got some funds allocated to advancing that project towards a feasibility study. So there'll be some additional drilling, some additional economic studies. Those are the big milestones that would come up, and then continuing on the permitting pathway to get towards a final investment decision.
Francis, thank you very much indeed.
Thanks for having me.
Francis McDonald, CEO of Lyft Power. Up next, Bombardier shares traded higher today after the Canadian aerospace manufacturer signed an agreement with Ottawa to supply 6 Global 6500 jets. We'll be right back. federal government has announced plans to buy 6 Global 6500 jets to replace the Royal Canadian Air Force's remaining Challenger aircraft. Our guest says the deal may not be huge in itself. However, Bombardier is already to deliver about 60 of these aircraft over the next few years. Let's welcome Nicholas Owens, industrials equity analyst at Morningstar. Nicholas, thanks for joining us, and thanks for putting this into perspective. So the deal in these aircraft, they're for carrying people, basically, aren't they?
It may be. Typically, these could be used as transport, or they may be equipped with various sensors and communications equipment, depending on the intended use.
Right, but in this case, it's for carrying government politicians, foreign dignitaries, and transporting wounded Canadian Forces members is kind of interesting.
Yeah, wow.
You say that, sure, it's more than 700 million on paper, but they have a lot of sales planned for this particular aircraft.
Well, it's good. The name of the game in these sort of high-end manufacturing, aerospace manufacturing, is you want to have your investment in the highly specialized assembly line pay off, right? So keeping that assembly line predictably busy, repeating and essentially churning out copies of your latest and greatest design is what is good for that business. And so adding 6 more planes to the backlog, and my guess is they might have less customization for the interiors than they would for, say, a private client. And so it could be very good, healthy throughput for the assembly line.
Right. And now, are these big? Are these big corporate jets compared to Bombardier's other products?
Yeah. So the Global 6500 is one of the larger models, and these are what we call long-range and high-capacity jets. They generally seat, say, 15 to 20 people, and have thousands of miles of range. So this is kind of at the upper end of the range, which is really where Bombardier and its competitors like Gulfstream operate mostly.
How would it compare to, say, the Challenger 3500?
I don't have the specs in front of me, but it's a bigger plane with longer range.
Right, yeah. I think the 3500 carries about 10 people, slightly fewer. But then you get up to the very fancy ones, like the flagship for today and tomorrow, the 7500 carries almost 20 people.
Yeah, and that is actually the effective upper bound of what a business jet can carry. It has to do with the U.S. FAA flight rules that if you are below 19 passengers, there's different rules in terms of the length of runway you can land on, et cetera, et cetera. So nobody really builds business jets other than these enormous, commercial conversions over 19 passenger capacity.
So Bombardier stock has had a pretty decent run this year. It's more than doubled, as you know, in 2025. Around 226 right now. Now, last time I saw you had a fair value of 218. So it's slightly ahead of that.
Yeah, I mean, from my point of view, that's within, a couple of percentage points. So I would say the shares are fairly valued. This contract doesn't fundamentally change my forecast. I had already incorporated, let's say, some growth in this defense and civil area. Essentially adding planes to the non-business jet customer base, and the company has signaled their interest in expanding that area of business, whether it's more planes or sort of outfitting planes with different types of equipment that is used for, let's say, civil and military purposes. It's an area I think they're interested in investing in.
And it's interesting, you reckon the company is on pace to get to 150 plane deliveries this year. Meanwhile, the supply chain has got a lot better.
Yeah, it was very interesting. Across the board on my aerospace coverage, second quarter and third quarter seemed to show really some loosening out of these backlogs, whether it be engines or other specialized parts, sort of metal castings and other things that had been kind of rippling through the aerospace industry. It seemed that the activities and investments and, I guess, hand-holding, et cetera, that these companies had been doing in the prior, say, 12 months started to really seem to pay off. And so you see stories where they were saying, well, we're waiting for engines. Well, now they have engines on the loading dock waiting for the plane. So that's kind of where you want to be as the aircraft maker. So it was good news.
And just remind us, who are Bombardier's big rivals in the business jet market?
So again, we're really talking about call it the upper echelon of business jets, these long range and larger capacity ones. And so from my point of view, it's primarily Gulfstream and Dassault to some degree.
Well, thank you very much indeed, Nicholas. Really appreciate it.
Thanks for having me.
Nicholas Owens, Industrials Equity Analyst at Morningstar. Got a big acquisition here to talk about. WSP, the engineering company, says it is supercharging what it calls its leading position in power and energy, and it is acquiring a company here, TRC Companies. They say it's a leading U.S. power and energy brand, and the proposed price is $3.3 billion US. That's about $4.5 billion Canadian. So a big acquisition by WSP. We'll have more on that later on the show. Up next, the Natural Resources Minister, Tim Hodgson, says he is launching a task force next year to look at ways to ensure the long-term health of that tariff-slammed lumber industry. We'll be right back. Let's have another look at the markets now that the dust has settled, and you can see the TSX and the big US benchmarks down today. Has been a good year, though. The TSX, excluding dividends, is up 27% this year. The NASDAQ is up almost 16%. Or sorry, the NASDAQ is up just over 19%, and the S&P 500 is up almost 16%, and the S&P 500 and the TSX are just down from the record highs they got to on Thursday. Maybe we could have another look at WSP Global. The stock didn't get a chance to react today to this because they just announced this huge takeover south of the border. They are buying a company called TRC Companies. They say it'll make them much bigger in the power sector. And the price here, $3.3 billion US. So it's a massive acquisition. And they say this will position WSP as the largest engineering and design firm in the US, supercharging our power and energy offering. So that's a big one. Let's get back to Canada and lumber. The Natural Resources Minister, Tim Hodgson, plans to launch a task force in the new year to look at ways to ensure the long-term health of the softwood lumber industry. We're joined by the Minister now. Minister, thanks very much for coming on the show. I guess these task forces, they're kind of a dime a dozen, but do you really think you'll find out anything new here that the industry doesn't know about?
I don't think it's a question of not knowing about it. It's a question of does the industry have the resolve to change, and can we provide with their help, think about how we provide the right incentives, the right opportunities for them to retool and respond to our new reality. So I think this is a different time. I just like to frame it for your listeners or viewers. I think the industry understands we are at a hinge moment. We are at a point where we need to respond to the new way the world works. We are in a much more mercantilist world. We're in a world where our largest trading partner has decided to charge for access to their market for all products. And that means an industry that has been geared for the last many decades to exporting large amounts of commodity product to that market is going to have to change. And I think that is something the industry has come to terms with. We now need to work constructively with the industry to find new sources of demand for Canadian wood. The great news is with things like our Buy Canada program and our Build Canada homes, we can create significant new demand for Canadian lumber products right here in Canada.
That's interesting, but in a way, the lumber industry is a microcosm of our economy, isn't it? It's just over the decades got used to just selling into America. It's going to be tough to change, isn't it? I mean, shipping lumber to Europe or Asia, I know we do a bit of that, but it's logistically challenging.
Actually, the biggest opportunity is right here in Canada. There is an opportunity for the industry to start producing much more engineered wood and much more mass timber products. Those products will allow us to build more affordable homes for Canadians. Those homes are going to use a lot more Canadian wood. Historically, our building codes would have allowed only a 2 or 3 story structure to be done in wood. With the new codes and using engineered lumber, we can now do 10, 12-story buildings all in wood. I was in a building this morning for the announcement that's entirely built out of engineered wood. When we do this, we can absorb huge amounts of our current production that is going as commodity lumber to the U.S. and use it right here in Canada. So it's a tremendous opportunity.
You're announcing a thing called the one window for forest companies trying to figure out this multiplicity of programs you put in. I mean, the government has put in well over $2 billion in various measures to support the forest sector. But that's a famous problem, isn't it, dealing with government? One minute you're dealing with an official, next minute they've gone on maternity leave or paternity leave, or they've been shuffled out of there. It's always going to be a problem, isn't it, dealing with the government and trying to get support programs?
Well, look, I prefer to see these things as opportunities rather than challenges. I think this prime minister comes from the private sector. He's used to key performance indicators. We are going to monitor how we perform against inquiries into the department. Our job is to be that one window. So when an industry participant calls in, our job is to understand the full spectrum of tools that we have in the toolbox and help that industry participant think about how it wants to re-engineer its business for this new reality. Again, we did not ask for this trade war, but we need to respond to it, and we need to win this trade war. And we will do that by rebuilding our industry so that it's stronger, more resilient, and more independent of the U.S. market.
We're tight for time, but it is a tricky one for you. The Globe and Mail reported a little while ago that the lumber companies came to you and said, would you ever advance us some cash that the Americans have been holding as duties? But you were reluctant to do it because the Americans might start claiming, oh, well, that's a new subsidy. So it's a tricky one for you, isn't it? Providing supports for the lumber industry. You don't want to add fuel or give them ammunition, I mean.
Yeah, so we need to be smart in how we support the industry. We need to do it in ways that doesn't handcuff the industry by putting additional unfair and unjust tariffs. I mean, I'll start from the premise that all of these tariffs are unfair and unjust. They're inconsistent with the existing trade agreement we have with the United States. But the reality is, they are there, and this is the world we find ourselves in. So we can complain about it, or we can be masters in our own house. And I think this prime minister and this government believes we can be masters in our own house, and we can use this crisis to come out of it stronger than we did going into it. That's what I'm working on.
Thanks very much, Minister.
Thank you very much.
Natural Resources Minister Tim Hodgson. Coming up after the break, we're going to be joined by the founder of Wikipedia, Jimmy Wales. He's out with a new book called The 7 Rules of Trust. Oh, this is a treat. We're joined by Wikipedia founder Jimmy Wales, and he's out with a new book called The 7 Rules of Trust. Thank you very much indeed for joining us.
Well, thanks for having me on.
One of the big messages of your book is that any society, any successful society, runs on trust. Just enlarge on that, if you would, please.
Yeah, trust is the basis of the way we interact with each other. It should be the basis of how we interact with governments, with journalism, with businesses. And to the extent we've seen this really big decline in trust over the last 20 years, I think it's a problem. And so the idea of the book is to say, look, we need to get back to a culture of trust. What are the proven things that we need to do to begin to rebuild trust in the world?
You do lean slightly libertarian. Well, I won't bog us down on that, but you're not dogmatic about it. But I guess that's part of the libertarian ethos as well. A society where we trust each other. We don't need rules enforced in a heavy-handed way.
Well, I mean, I don't know if that's a libertarian idea or just civilization. Certainly, I don't think anybody wants a world where, the people in charge aren't trustworthy, where the people in charge treat everybody else like they aren't trustworthy. And so I do think, more broadly than any particular political position, we all need trust in order to be able to function coherently in any kind of a democracy.
I know Wikipedia has been praised as reliable, and just remind us, it's self-policing, isn't it? There's a bunch of experts and editors, and they correct each other.
Yeah, it's very much built on a fundamental of trust, and I appreciate you saying we're reliable. We're always a little more concerned about ourselves, and we never try to overstate how good Wikipedia is. We think it's pretty good, but we know it needs a lot of work. But that's also a part of why people trust us, because they know we're trying really hard to get it right, and we don't always get it right, but we've got the right spirit, I think.
You take no advertising. You do appeal for funds. And of course, a lot of us over the years have found Wikipedia a darn useful tool.
Definitely.
Can you give us some idea of what it costs to run Wikipedia or what your revenue is? Can you give us any dollar figure?
Yeah. I mean, all the financials are publicly available. It's like $180 million a year. And the vast majority of the money for Wikipedia, 90+% comes from the small donors with an average gift of $10. So, it's really is about a grassroots thing. And that's also a part of the trust. We're not funded by governments. We're not funded by a handful of billionaires. We're funded by the general public. And that's really important.
Roughly how many full-time employees would you have? Can you give us a ballpark idea?
Yes, 700-800. I mean, it fluctuates obviously over time, but not a huge amount considering, we have over 2 billion devices access Wikipedia every month.
And roughly how many editors do you have?
Well, it's kind of hard to judge, over the years, millions of people have edited, but in terms of the core community, the real active volunteers, it's probably 60 to 80,000, depending on how you look at it. But then there's the really tight-knit group, 3,000 to 5,000 people that really make all the difference.
Just returning to our theme there, are you in despair sometimes when you hear people talk about a post-truth era?
Definitely. I mean, I think people are still very, very passionate about wanting facts, and obviously various aspects of the social media environment are sort of shoveling all kinds of misinformation and nonsense at us. I think people are growing unhappy with that because it doesn't matter where you come from politically. First, you want to know what is the case, and then we can have a serious debate about what to do about that.
I love this detail from your biography. Your mum bought the World Book Encyclopedia, and they would send out stickers to update content when it became outdated. And you used to love putting the stickers in the book.
Oh, yeah, it was great. I remember putting the sticker in for Moon because people had landed on the moon, and they had a big article about that, and I thought that was pretty fantastic, yeah. I always joke that was my first experience editing an encyclopedia, even if it was just putting a sticker in the old version.
We've only got 30 seconds, and I'm sorry. There's controversy over whether you were the founder or the co-founder. Even your Wikipedia page calls you the co-founder, but you feel that you were essentially the founder, and I'm sorry, we are tight for time.
I feel that it is so unimportant. I think Larry doesn't get enough respect for his work in the early days. It's literally a fight that I don't no interest in having.
Okay, your colleague Larry Sanger. Thanks very much indeed. But I would like to thank you. Wikipedia is a thing that's made my life better. I really appreciate it.
Oh, thank you. That's very kind.
Jimmy Wales is founder of Wikipedia and author of The 7 Rules of Trust. Oh my goodness. Are we out of time already? Wow, it goes faster when you're having a good time. Thanks for watching.